Hello, and welcome to the March 2021 Economic and Market Update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. After a weak January, markets resumed their climb in February. Large company and developed markets around the world showed gains, including the Dow and the S&P 500 here in the U.S., of between 2 and 4% for the month. Riskier assets lagged, including the NASDAQ and emerging markets, with both showing gains of around 1%. The gains were better at mid-month, but a spike in U.S. interest rates on inflation fears pulled markets down. As the month ended, however, rates dropped somewhat and markets bounced back. This was a wake-up call, though, that even as conditions improve, risks still remain. And looking forward, while markets clearly still expect continued improvement, they are starting to take more risks into account. While markets were choppy, in the real world, things kept getting better, a lot better. On the medical front, new cases and hospitalizations were both down by over half during the month. Still way too high, but much better than they were. Vaccinations more than doubled, despite a weather-related slowdown for part of the month, and that'll accelerate further as the J&J vaccine, which was just approved, comes online. The major risk here remains that a more contagious strain of the virus could cause another rise in cases. And while there may be tentative signs of that, for the moment, all of the trends are still quite positive. On the economic front, we also saw continued progress. Although damage from the third wave is still there, with unemployment still far too high. Now that states have largely reopened, companies are hiring again and layoffs drop back at month end. On top of that, federal stimulus payments hit bank accounts last month, and consumer confidence is moving back up, even as retail spending spiked. The American consumer is back in the game, and the business sector never left it. So while risks remain, things are getting better. And that's clearly what markets are seeing too. Despite the recent turbulence, markets were up last month and are still near all-time highs. Markets look forward, not back, which explains the continued rally and is a good sign for the rest of the year. So while risks remain, with the rapid expansion of vaccinations, they should be contained, and over the next couple of months, the medical news should keep getting better. And the economic news will follow suit. The economy was very resilient through the third wave, and the rebound we now see should continue as states reopen and as the fiscal stimulus helps confidence and spending power. Most analysts see the pandemic coming under control by the second half of the year, which would support an accelerating economic recovery. And that's what markets are anticipating as well. While we'll likely see more volatility in the news and in the stock market, over time the prospects are good and getting better. As we move into the year, the risks are still there, especially over the short term. But looking forward, we can see something like normal not too far ahead. While the pandemic is still with us, and a more contagious version of the virus might still appear, for the moment we're through the worst of it, and vaccinations will help to contain any future risks. On the economic front, the stimulus checks have removed much of the immediate concern and allowed growth to keep going while vaccinations proceed and the economy reopens. This should get us back to something like normal within the next several months. And that's what markets are seeing. While last year ended on rising risks, this year those risks are declining, although we still have a couple of months to go. That's it for this update. Thanks for watching. Join me in April for the next monthly update, but until then, be sure to check my daily blog, The Independent Market Observer, for more timely comments. Stay safe, stay sane, and stay healthy. We are getting through this together.